Welcome back to our second part on looking into how to make digital assets bankable. And we're now looking a little bit into the future. Basically, we're taking off where we left with the last video. We still have Mimi and Lucas here. Lucas, some might argue that if we unlock all the money that is with the asset managers, that might be like the biggest leverage that we can have within the whole digital asset world. And I think you have a pretty good answer to do that. Do you think you can unlock this potential for the digital asset world?
Yeah, absolutely. I think this is the most important thing, because most of the world's money is managed by asset managers or institutionals that, take care of that. So giving them a format in which they can structure and wrap these digital assets and then put it into their clients' portfolios is major key, because if they're not incentivized, or I should say it like this, they need to be incentivized to do it, because right now, and this is actually a big topic in banking in general, is the asset outflow topic. So if you're an asset manager and you want to invest in alternative assets, even like art or anything alternative, then that's a great investment case. But the problem is you have an asset outflow, meaning your bank account number, if you will, from the asset manager will shrink, because you need to wire outside of your account cash in order to receive a painting or a crypto. Yeah. And yes, you have the painting or the crypto, but then your cash is still less. And so you have that asset outflow. And that's a big problem, because nobody wants to do that. And therefore they just hang on so tightly to all the bankable products that also, all these ISIN products out there, which have been wrapped and re-wrapped. And there's not such innovation out there in these financial products. So now through us, as we are the enabler of this new generation of securitization, where we can securitize anything, I do believe that this will change now drastically, because yes, crypto can be wrapped, all the alternative assets can be wrapped, and it's in a format where the asset manager does not have this asset outflow, and they can include their management fee and performance fee, and then they're properly incentivized.
So basically, what you're saying is you have some kind of like the holy grail on making this all accessible finally for all these institutional investors.
Yes, this is our ambition, and we have great fun doing it. We are as engaged as we can be with all of our great partners. Maybe one thing to add is you can look at us like, so if you have a crypto bank that has a really cool offering on how to really securely store the crypto, which is also an important integral part, of course, then this is, let's call the Ferrari of an offering, and we are just the tires. But the tires take you places that are important, but yet it's not us. It's always our clients that are doing the moves, that have cool offerings, that, they're in the front, and we are just the silent enabler. Like we are a white label platform, if you will.
So when we look into this, you indirectly mentioned it, custody.
Yeah.
So how do we deal with this part? I could imagine that this is still a challenge for many of them, right? Because custody is custody, right? It's a challenge, and you need to trust either someone else or do it by yourself. So how is this from like the perception of like, for example, an asset managers, or how do they see custody in this whole game?
Yeah, like you said, custody is a delicate topic, because some people in the crypto space say not your key, not your coin, right? I think by just looking what has happened in the past, I believe it's some crazy number of 20% of all Bitcoin is already lost. Yeah. And I myself are one of these people actually that lost some of my cryptos, because I wanted to be extra safe for myself, and then I kind of messed it up, And I think this happened to so many people. So I would rather now trust somebody else with my crypto. And I have personally my cryptos, mostly on exchanges or on other custody providers, that also have insurance, And it's a big, delicate topic. But I think what's important is that in our framework, for instance, our clients, they choose who they want to work with. So they have a free decision, and they say, okay, we want to work with this counterparty, and the assets will be there. And then we set up that certificate accordingly, and then everybody's happy.
It's beautiful that you were saying that, because I think with that, the comment section under this video will blow up, because that's I think there's only like two types of opinions out there, right? First one is put everything into your own hardware wallet or whatever. You now came up with the thing that most people would say like is the most or the wrong way of doing it, if there's something like a wrong way. So that's pretty interesting. But how do you see that? Like from institutional side, they probably all use custody services, right?
Yes, I mean we do have some crypto banks here in Switzerland, which is also really cool, and actually the reason why we are here. I mean, I was living in the States before in Los Angeles, but came actually here for the Crypto Valley. I mean, it's a really good place and ecosystem, and you have a really cool regulatory framework in which you can operate under. And remind me, what was the question again, or the second part of the question?
No, you already answered that. So
Okay.
I think we can just like leave it like that because like I'm really excited for like the comment section under this video. So we need to jump onto this discussion for sure. So maybe it blows up. I'm actually a fan of both. So keeping some on hardware wallets and some in custody services. So I'm neutral. I'm like I'm like the Switzerland of custody, so to say.
Yes.
No, but fun aside. If we're looking into this whole part, right? So I mean, custody is one topic, the service provider part is one topic. When we look into the challenges also on that, I think at least I'm not aware of anybody else doing what you are doing to digital assets. And I think there's nobody else apart from you in Switzerland doing something like that. Why is it that we, first of all, have this focus here in Switzerland? And why is it that nobody else is tapping into this game?
Yeah, well, twofold. So I think Switzerland has always been and hopefully always will be some sort of safe haven that nobody messes around with too much. I mean, it's about 1/3 of the world's wealth that is managed out of here, and therefore it is also very slow in that respect. So I mean, Switzerland is known for being not the fastest on decisions and being more passive, but yet it's really stable and safe. This is why. Most big crypto projects started out of here. I mean, Ethereum was initially founded here in Zug, which kind of started this whole Crypto Valley name even. And then the second is Switzerland is doing also a really good job, and the custody providers here to really offer extra safe services. Like there's deep cold wallets, in mountains and whatnot. And I think, this is cool. I've seen this. I got invited to one of the crypto banks in the cold, in the rooms where they have it. It's really quite interesting and cool. I think it's necessary, right? I mean, an all Swiss solution is what also many asset managers are looking for. They don't care. I mean, even if you have the safest offering and it's on the blockchain and nothing can happen, but yet they want an all Swiss solution,
Very interesting that this perception is also like bridging old and new, right? So Switzerland has its position as like the heaven for that, or like the best place for that. Really cool that it's also now happening with the digital space on that end. Just looking a little bit at the world, right? So I mean, we are now here in Zurich, in Switzerland. So would you say that there's also a lot of interest from outside of Switzerland in terms of making digital assets bankable in a way? Or would you say you're focusing really on Swiss institutions?
No, absolutely. I mean, our clients are all over the world, to be honest. I mean, from Australia to the United States. I mean, everybody can work with us as we have such a modular framework. But yes, majority of the clients, as of now at least, are Swiss, just because we started here. But it's also on our roadmap now for the next 1-2 years to really globalize, also in terms of representative offices, East and West.
Let's look a little bit into a glass bowl now, and just look into the future. So I mean, talking about 6 months in digital is far away, but let's challenge that for 3 or 5 years. So looking 3 to 5 years into the future, coming from these challenges and also these opportunities that are there for this whole crypto asset space, what would you wish for? Or what would you hope for? That's also, I mean, it's a challenging question.
Yeah, it is. I mean, I personally have always been fascinated by the monetary system, how we have it today and how it got to where it is today. And I've been going down this rabbit hole, and I've asked myself many questions. I mean, the craziest thing to me is still, if you would ask the the Fed how many dollars there are, they probably couldn't tell you. I mean, maybe they could, but it probably wouldn't be accurate. Yeah. And this is a general discussion, but I think what has been happening and what is happening in this world is really, can be described as not fair to some people. But of course, it was important or is important to also create a monetary system that's inflational, right? I mean, it creates growth, right? I mean, we wouldn't have all these beautiful buildings and everything that we have if you wouldn't have had this monetary system. So Bitcoin, then talking about it, it's deflationary, right? I mean, there's always going to be less and less and less, so people will hold on to it, they will not spend it. I mean, it's also not a currency, right? That's a whole different discussion. But I think the best thing that could happen is just education, and luckily this is already happening, where people just get into it themselves and they trust themselves enough to take decisions for themselves. And I think this is the best that could happen.
So that's another, or a lot of new stuff for the comment section as well, because I share a lot of the things that you just mentioned, because I think, like, especially this part of fair ecosystem form, fair monetary systems is something that's really interesting, right? And like, especially when you're looking into like this discussion, what's the value of a Bitcoin, right? We can put a dollar tag to that, we could put a euro tag to that. But the interesting part is what happens if we remove like this dollar or euro tag to crypto assets, right? Because probably we don't want to exchange it back in 3 or 5 years. That will be like an interesting world, right? When we say like, hey, you have 1 Bitcoin and you pay whatever with that, and someone else has something else and pays something whatever with that, that will create a completely new system, right? And this will also create a new space to explore, coming back to more like probably smaller ecosystems there. So I think that's a really interesting point that you just mentioned there, and I'm like really excited to see where we are ending with that. And ultimately, when we're looking again at bankability, what would you recommend now to any asset manager on this planet and saying like, hey, I don't have digital asset right now. What should they do? Just call you, or
yeah, I mean, yeah, just don't be scared and try. Start small and then just evolve and educate yourself on the general topic and the technology behind it. I mean, the blockchain technology is, and this double spend problem that was solved. I mean, this is a big deal, and this can be. And then if you look at smart contracts and all the smart contract platforms, this is insane what you can do with that. And for the better of all, and for the humankind, I mean, this is also very philosophical, but it should be fair, and everybody should be treated fairly. I mean, if there's too big of gaps in any kind, it's not good. There's only losers, right, in the system, because they are scared and they are, in a bad place, and you don't want that. You want everybody to be on the same page, really. And cryptocurrency is the key to a fair digital system that everybody can trust. And trust is, I think, the base to, everything. I mean, everything human interaction related. I mean, trust should be a given, and now we have the technology for exactly that. And I think it will take a long time, probably even not our generation. I mean, me personally, I think not our generation will be the real people benefiting from from all of this, but hopefully the generation after us.
A fun fact, interesting that you're mentioning this trust thing. The first module actually in our Blockchain Masters program is called Welcome to the Trust and Transparency Economy, because we're building exactly on like this philosophical aspect of the blockchain ecosystem or cryptocurrencies in general. Probably before we close the second video of the series, when we're talking digital assets, we use this word now a lot, also in the first video. Probably quite a lot of people relate cryptocurrencies to that, but there are also other digital assets. When you look again into media headlines, it most of the time feels like Ethereum, Bitcoin, and probably a little bit Cardano, like the top 10 large ones. But there's also like emerging fields, if you want to call them like that, like NFTs, right? Art NFTs and something like that. So how do you see the interest from the market when you're working with your asset managers? So are they mainly looking at things like the cryptocurrencies, or is it like things like digital art, NFTs and stuff like that also a big topic? Or to put this question in simpler terms, what are the digital assets that the market is really after at the moment?
Yeah, so NFTs, I personally love them. I think it's amazing what this can do for all the creatives, and I mean, so many use cases just on that. But what we see at the moment is, of course, the prominent cases like Bitcoin, Ethereum, top 10 by market cap. More straightforward products. What I find really interesting is also DeFi. I mean, the yields that you can achieve in decentralized finance protocols and yield farming, all of that. I mean, this is, unseen basically in the traditional asset space. So we are now really bridging that gap too, and this is what I'm currently most excited about. But I think just even the classic Bitcoin tracker certificate is already a really good one, because it gives every bank in the world actually now the chance to create their own Bitcoin tracker certificate with their name on top, and we wrap it up for them. We run the structure, they're in charge, and yet they can book it into their clients' portfolios. So it's a win-win, and it empowers the simplest form of digital asset, which is Bitcoin now.
And which probably also leads to more trust into the whole system itself again, right? Because like probably some people still feel more comfortable in like general terms with like the banks that they already know compared to any kind of exotic exchange or whatever. So I think that's also a factor that we should count in, right?
Yeah, it's fascinating how much trust banks have. I mean, they were really essential, of course, up until blockchain. It was impossible otherwise to transact. So therefore, yes, it's amazing that banks can now offer crypto products, and hopefully this will help us all to, get more exposure or more, get more into the space and take it to the next level.
And we're really excited to see what's going to happen in 5 years there. And I would say with that, we are closing our second video here. So thank you for staying with us, and see you very soon again.